Welcome to Caching Waves. This is an Elliott Wave update for XRP. Now, quick recap. This is from last video. We are looking for a multi-year triangle to be complete and looking for all-time highs to the upside. In this scenario, we have a series of threes in each one of our A, B, C, D, E as the triangle, and we hold above wave C for the E wave at 29.1 cents. And in this scenario, the E wave is in, so we want to start our count from the top of that E wave. Now, it doesn't invalidate if we make one more low, but it makes it less probable, right? We want the bottom to be in right now. So we're going to be starting our count from this E wave low. This is the E wave low. You can see right here, that's the significant pivot we want to hold at 38.23 cents. Now, mapped out currently, this is how I have it counted. I think it is the most accurate count available right now, and that is we have a wave 1 and 2. We came between the 618, just past the 618 retracement of wave 1 for wave 2. We then pulled our Fibonacci pivots from the beginning of wave 1 off of wave 2. That's the targets you see here. Expected target for a third wave is 52.43 cents. At the 161.8% extension of wave 1 off wave 2. You can see we came past that. Our extended third wave target is the 2.618 at 61.68 cents. Now, this became so impulsive because we got what I propose as three nested 1-2s. 1, 2, 1, 2, 1, 2, all of one lower degree. And when you get that and it actually plays out as expected, things get pretty impulsive. That's where you get these big extensions. So off our second wave 1, this was a running flat, very extended out for our wave 2. And our third 1-2 was just a sharp correction, most likely a zigzag. So since we came back by that third wave target, our third wave target is now up at 61.68 cents. But if you take our third 1-2, we came actually pretty close to expected targets in this wave, which was right here. The third wave just passed 1.618 and our fifth wave of the third there at 55.90. So just wick through that. So that one's working well with those extensions. And now we're getting extended up, as you can see. So I also took a pull from our second 1-2. That's our fib pull. Our target for our third wave was 51.23. But once we got that third 1-2, we get extended targets right there at 56.38. You can see we just wicked through that. So that's hitting ideal. Okay, so we're going to talk about the next move. So far we have a 1-2, 1-2. 1, 2, 3, 4, 5 for our third. We then get a running flat where our B wave makes a new high. C wave protects the A as an ABC 335. And we're working on our fifth wave of the third. Okay, so we're on our fifth wave of the third, coming right up to that 61.68 cents. Here's our targets for our fifth wave, and how that is calculated is this second 1-2, the length of it, projected off of wave 4. We usually find confluence between that zone when a third wave is extended. You can see we've come slightly past that. Second target is 62.01 cents. That's the 1.618 extension of wave 1 off of wave 4. You can see that lines up quite nicely with that 2.618. So we'll see if we get that. Technically, we don't have to go any higher. We can pivot from here and make our fourth wave in blue. So just keep that in mind. Expecting a pivot very, very soon. Now, if we do get extended, you can take from beginning of wave 1 to wave 3 in green off of wave 4. And expected target there is the 618 extension of that at 65.48. But I would stick to this confluent zone personally myself. Not financial advice, just what I'm doing. Hedge in this area, looking for this fourth to play out. Now, because we got a sharp correction in wave 2 in blue, I expect a sideways consolidation in wave 4, rule of alternation. This can pan out in many different ways. We can get a flat as an ABC or WXY. We can get a running flat, just like this wave 2 here, which would make an A wave, higher B wave, C wave will be higher than our A, like so. And then we get our fifth wave in blue. Or we can get a triangle, like so, and get our fifth wave. Not sure which one we get, but we do expect a sideways consolidation and kind of a light retracement because we got a deep retracement here for our wave 2. Okay, so as for targeting, take the beginning of this third wave right down here. We're going to have to move the pivot whenever this fifth actually ends. It looks like we have one more kick up. Even if you look out on the hourly, you can see we've got a 1, 2, looks like it's working on a fourth here, and we'll get our fifth kick up. So we'll have to see where that pivot is, but where we're going to be looking for that fourth wave to finish is in the area of the previous fourth wave, one lesser degree, and between the 236, 382 is ideal, and we want to stay above the 50. Prefer not to break any of these levels, so somewhere in this zone would be ideal. Probability shift significantly if we break the 618 and come out of this pitchfork. Invalidation of the impulses at the top of wave 1. So ideally we just get one more kick up, come back in our flat, go up for our fifth, and then we can target our fifth wave same way we're targeting this fifth wave, but I'll explain that in a later video. But everything's looking good here. My plan is to hedge right here at the top of this third, wait for our fourth to give us some clear indication of what pattern we're getting. Need that price action to fill out to get confident on what we're getting, whether that's that running flat, or triangle. And then I will get rid of my short hedge, play that fifth to the upside. Because one thing, as much as it's unlikely, remember this is still only a 3-wave move. Okay. All right, so anything else to show here? So for recap, this is our most confluent zone. We can get extended. One other thing to consider too, this can happen when things really get crazy and we get huge impulses, is we can get extended fifth waves too. So I want to at least talk about that. And what that would look like is, say we get our kick up here, if we start drifting sideways here, right? If we start drifting sideways here and don't make this larger correction, there is a chance this fifth wave gets extended too. This is still our 3-4, but this is just our 1, 2, 3, 4, 5. And this third wave just gets an extended fifth as well. And then we get our fourth fifth. So just things to keep in mind. And how I would play this one out is, I know this can also make a running flat. Once that is complete, I'll discuss this more if this happens, but we can put our B and X zone. So if we're expecting this to perhaps come down like this and make an expanded flat, but we get something sideways and we start breaking out, right? We just start breaking out. I would take the correction, put on our B and X zone, and I would probably get rid of my short hedge right above the 1.618, because that's when a B wave becomes invalidated in a flat at 63, according to this one, 63.11. Don't take that price serious, because obviously we need that pivot first to pull that fib. But that's just an example. We start breaking through that. I'm like, oh, we got an extended third wave and a fifth, right? That's how you can get early indications of a more extended wave, because nothing says we have to stop here. It's just ideal in Elliott Wave terms, right? You can see all our confluence. All right, I hope I didn't make that too complicating. I'll talk about it more in the future if we get this move and how I plan to navigate that. But for right now, planning to hedge right here, wait for this fourth wave and play the fifth. And after that, that's our larger one too. That's the real move we want right here. That is the big one. All right, guys, so that's it for XRP. Thanks for watching. I'll see you on the next one.